Okay, good morning, everyone. Looking at the US stock market, the Dow has again recovered from the 24,000 psychological level. Since then, we did see a good consolidation breakout above the 25,400 points. Subsequently, the Dow continues to inch higher towards the subsequent and also breached the 5,400 points a level yesterday. The positive sentiment over the past couple of days was mainly underpinned by the trade deals between US and the European Union. So moving forward, we expect the Dow to continue to inch higher towards the 25,800 points. That will be the immediate reasons for now, while the key support will be located towards the 25,000 towards the 24,500 points level on the Dow Jones Index. Similarly, on the broader market, we did see the S&P 500 has recovered from the 2700 psychological level. Since then, we did see the S&P 500 has experienced the consolidation breakout above the 2750. It subsequently traded higher above the 2800. After hitting the near the 2850 level, we did see some of the mild weakness on the S&P 500 as the S&P 500 fell 0.3%, dragged down by the weakness in technology sector after Facebook has reported the weaker than expected revenue and also has guided a future weaker earnings. So moving forward, we expect some of the mild consolidation of just a mild weakness towards the 2800 psychological level to see how it holds there. If you can see some of the support along the 2800 and the S&P 500 were to recover from that point onwards, then we could expect the S&P 500 continues to trend higher back towards the previous all-time high, which is around the 2870 level. In the meantime, the 2800 will serve as the immediate support level for now, followed by the 2750. Some updates on the crude oil prices. The crude oil prices has again endured a volatile trading session after forming the dodgy candle along the 75 US dollars per barrel level. Since then, we did see the crude oil prices has traded lower just towards the EMA 120, which is around the 66. The EMA 120 will serve as a very strong support for now, as earlier we did see the EM. It has recovered from the EMA 120 and subsequently continues to inch higher. Once again, we found out the crude prices have found some support along the EMA 120 and continues to march higher as well. For now, we expect some of the gradual recovery on the crude prices back towards the 70 to see how it holds there. If the 70 level were to be breached, further upside will be seen towards the 73 or even towards the 70 US dollars barrel mark. In the meantime, the 66 will serve as the immediate support level for now. Okay, some updates on the local front. The FMKLCI has again formed the double bottom formation along the 1660 level. Subsequently, the FMKLCI has formed the double shape formation breakout above the 1700. The key index continues to march higher above the 1730, and recently it has breached above the 1760 and continues to maintain above the 1760 level as well. So for now, we will expect some of the mild consolidation on the FMKLCI. Given the overbought position on the key index right now, any gains will be just capped towards the 1780 towards this 1800 psychological level. In the meantime, a pullback towards the 1730 will be seen as a healthy pullback for now. On the lower liners wise, we did see the FM small cap index has formed the bullish engulfing candle on the 12th of July. We did mention that the RSI has been on a recovery phase from the oversold position. The MACD indicator has really issued a buy signal from that point onwards, and the FM small cap index continues to march higher for the next 10 trading days. After rising for the past 10 trading days, we did see the reversal pattern on the FM small cap index as it has found the bearish engulfing candle yesterday. As earlier we did mention on Wednesday, there's sign of a reversal on the FM small cap index, and on yesterday we did see the bearish engulfing candle. So for now, we expect some of the weakness or some of the profit-taking activities on the FM small cap index after rising for the past 10 trading days. A pullback will be a healthy one for investors to digest their recent gains towards the 14,500 points level before the next uptrend to resume on the FM small cap index. So for now, it's advisable for investors or traders to hold on to their gains if the counters were still on the uptrend in type formation, or any pullback below their immediate support or trailing stop loss point. Then investors is best to take their profit or lock in their gains or just trim their losses. On stocks wise, we can watch out for firstly is Burma Auto. Burma Auto has been on a pullback phase from the recent peak of around the 2.47 ringgit level. Since then, it has pulled back just towards the EMA 120 and recovered from that point onwards. The EMA 120 will serve as a very strong support level, as well as we did see some of the recovery along the EMA 120 level. So for now, on Burma Auto, on yesterday, we did see a bullish Harumi candle was being formed on Burma Auto that we're going to monitor for this potential symmetrical triangle formation breakout. Should there be a follow through by interest above yesterday's high, which is around the 2.25 ringgit level, then we can trade on Burma's Auto. Firstly, towards the 2.35 ringgit towards the 2.47 ringgit level. The stop loss point will be located below the 2.17 ringgit on Burma's Auto. Following yesterday's bullish candle as price recovered to close above the EMA 120 level, we did see the MACD histogram has really turned green, whereas RSI has really risen above the 50 level yesterday. On AJX, price has again staged some of the mild recovery just towards the 38.5 level. However, the recovery did not last long as the AJX has pulled back and found some of the support along the EMA 20 level. So this could be interpreted as the short-term breakout, a pullback, and a potential continuation pattern that we're going to monitor to see if there's any fall through by interest above this short-term consolidation between the 35.5 towards the 36.5 level. Should there be a breakout above these 36.5, then we can trade AX towards its first intraday target price, the 38.5 level, followed by the 40 cents level. The stop loss point will be located below the 35.5 on AAX. On CCK, Alan, we did mention that this could be the potential longer-term breakout, pullback, and the continuation pattern as price has again reversed its position from the 1 ringgit and 1 cent. It has pulled back just towards the EMA 60 level and formed a good bullish candle. Subsequently, price recovered and traded on a sideways movement. So moving forward, we'll be monitoring for this breakout above the 89.5 level on CCK. Once this 9.5 level were to be breached, then this could be the confirmation of the recovery on the CCK towards the 96.5 or even towards the 1 ringgit and 1 cent level. The stop loss will be located below the 82.5 on CCK. On KUB, price is still in a downtrend formation, and so for now, is any rebound will be just taken as a technical rebound play. Price has recovered from the 28 cents intraday low. Subsequently, price has experienced the strong breakout above the 34 cents level, accompanied by some of the improvement in volumes being traded over the past couple of weeks. So for our KOB, we're going to monitor for this next breakout above the 36.5 cents level. It did breach above the 36.5 cents yesterday, but it now closed above that. So for now, we need to monitor for this breakout above the 36.5 cents. Once the 36.5 cents were to be breached, further upside will be seen for our KUB for technical rebound towards the 39.5 cents or even towards the 44 cents level. The stop loss point will be located below the 34 cents level on KUB. Last two company for today, firstly is SP Setia. SP Setia has again recovered from the recent low of around the 2 ringgit and 77 cents level, forming some of the hammer candle. Subsequently, price has been traded on a sideways manner over the past 4 months trading period. And recently, we did see some of the accumulation was taking place on SP Setia over the past couple of weeks. For SP Setia, we need to monitor for this short-term consolidation breakout above the 33 ringgit and 9 cents level. Should there be a breakout above the 3 ringgit and 9 cents, then we can trade SP Setia towards just the 3 ringgit and 30 cents level towards the 3 ringgit and 50 cents. The stop loss point will be located below the RM2.91 on SP30. Everything appears to be quite positive on SP30 right now. As you can see that the MACD indicator has been forming the higher low position and could be potentially forming the higher high position as well. Last company for the day will be a Boilermac. Boilermac is also still on a downtrend formation, and any recovery from now will be just taken as a technical rebound play. Price has again formed some support along the 63.5 cents level. Subsequently, price has recovered just for 2 trading days, but on the next day itself, we did see the reversal pattern on Boilermac as price has pulled back and traded on a sideways manner. But the good thing on Boilermac right now is that we did see a breakout above the 70 cents level yesterday, accompanied by some of the improvement in volumes being traded. With the breakout above the 70 cents, we could anticipate a price to trend towards the first target price at the 75.5 cents towards the 77.5 cents level. The stop loss point will be located towards the 67 cents level on Boilermac. If you have any questions, you can put in your chat box and I'll reply you shortly. There's one question on EVIN. Earlier we did mention EVIN could be forming the breakout, the pullback, and the potential continuation pattern. However, on this day itself, on the 22nd of June, we did see just a 1 day of recovery, and subsequently price traded on a sideways manner. And recently, during mid of this month, we did see EVIN has recovered towards this first target price at the 87 cents level. After hitting the 87 cents, we did see the pullback happens. The pullback is considered as a healthy pullback, as you are seeing some of the lower volumes being traded on EVIN. So for EVIN, if you are still holding on to this position, a pullback below the 80 cents level, it will be the immediate take profit level. But if you can take further risk, then the 73 cents will serve as the immediate the final defense for now. So if price were to breach below the 80 cents, then it's advisable to take your profit or lock in your gains, given that this could be the potential bearish divergence signal on EVIN. While should there be a recovery pattern from this point onwards, like a bullish engulfing candle or a hammer candle, then we could anticipate EVIN back towards the 87 cents or even towards the 95 cents level. But over the near-term period, there's a high chance that EVIN could be heading towards the 80 cents, given that price has really violates below the EMA 9 level yesterday. On Sunrise, similarly, earlier we did mention that we expect price were to pull back, but they did not pull back and subsequently traded towards this 89 and also the 92.5 cents target price level. After hitting the 92.5 cents, we did see the reversal pattern on Sunrise as well, with the overbought position and as well as the MACD indicator has forming the two red bars over the past 2 trading days. A pullback below the 89 cents will be taken as the immediate take profit or cut loss point on Sunrise. But if you still want to hold on to Sunrise, then the final defense will be located towards the 86 cents level for Sunrise. While any gains for now will be just capped towards the previous peak at the 95 cents level. If there's no further question, that will end the morning briefing for today. Thank you.